I'm on the trading floor with Jim Cramer, who's here to answer your Twitter questions. And Jim, we saw an open with the Dow down with a triple-digit decline.
Yeah, it's going to continue. I mean, there's just people don't believe last week's rally. I think that the volatility is such that you shouldn't. Let it come in.
So Joe asked, why do we even follow the Dow anymore? Shouldn't we just look at the S&P and NASDAQ?
Well, go ahead, look at the S&P. I mean, the S&P's at 16 times earnings and yields 2. The Dow's at 14 times earnings and yields 2.5, almost 2.5. You look at whatever you want. I don't care. I'm not going to stop you. You can look at the mid cap if you want. Hey, you know what? There's no dogmatism here.
Let's look at some stocks specifically. Mark asks, what about Alcoa? Would love to see you break it down. Is a value trap, a great value, or meh?
I saw someone this weekend talking about how the yuan is really hurting them. I mean, look, it's caught up in the materials decline. Alcoa is a good company, but no one wants to think about it. It's down more than 40%. It's typical of what I'm saying. It's in a total bear market, as if nothing good has happened, and many good things have happened. But I'm not telling you go buy it, because then it'll go to 7 3/4, and you'll say, what an idiot. I'm tired of being called an idiot. I just think it's inexpensive.
I would never call you that. What about HCA Holdings?
HCA was down. It really was a major breakdown last Monday, and then that was the flash crash. Came back well. It's in a bull market mode. That stock makes sense.
All right, how about financials, Citigroup in particular?
All the money center banks are in free fall, and Morgan Stanley down 12%, owned by Action Alerts. Now, Citi for the year is basically unchanged. But the fact is that if the yield curve, the Fed raises rates, and the yield curve, and the 20 and 30, when you go out 20, 30 years, they stay the same, then Citi's numbers are going to be cut, and people are going to say, I'll buy it in the 40s.
Toby asks about American Airlines. Is it a hold or a sell?
Well, Delta's down 10%, and I think it's cheaper than American, because American has a very difficult amalgamation going on. You know what? I think that in the end, the airlines are in bear market mode now. And so you take your action from Delta, which is the best, and that's down 10%. If it's not down 10%, don't touch it.
All right, and finally, Spencer says, I've been thinking about what you said about Fitbit last week and Apple Watch. Aren't they targeting different users entirely?
People thought they were, and then we got a survey which said that they're targeting the same users. I think the Apple Watch #2 will be much more savvy about athletics, and I think that, remember, if they could do something, Tim Cook's on the board with Nike. If they were to team up, you can't team up with Under Armour then, but Fitbit has to team up with somebody, because they should they should actually sync up with Under Armour, with their connected program, because right now, Fitbit, which hit our price target at 50, it doesn't have any sort of clarity on what it won't give us clarity. And you know what, in this market, which is a bear market, you need clarity. You can't just come out and say, trust us, because no one's trusting anyone.
All right, Jim Cramer, thanks so much. Send your Twitter questions to Jim. Use #CramerQ. I'm Rhonda Schaffler for The Street.